Welcome to another video of ours. My name is Robin, and I'm joined by Kirill as usual. So, what's in the pipeline, Kirill?
Yeah,
What's in the
juicy,
bag?
juicy news. We're talking about GTA as the whole
Yeah,
world is talking
boy.
about GTA. Everybody wants it. Everyone wants it to be as soon as possible. But we got a nice teaser. What was that trailer even? Right,
Yeah,
about a
yeah,
week ago.
exactly. Yeah, true. Yeah, yeah. So, yeah, as they always do, right? They publish trailers way in advance just to get the marketing rolling. They did this shit in the past with GTA 5 and GTA 4. It's like a build-up of 2 years, and basically it's to showcase yeah, what you can expect from a game, how groundbreaking it is, get people talking about it, and as you can see probably on your YouTube feed or whatever, just breakdown, teardown videos of the whole trailer, showing you every nitty-gritty detail people find, and it's just basically how they get people talking on about their products, and this will die down in a year when they will actually start picking up their marketing activities on GTA. This is how, yeah, this trend is similar to all like their releases for GTA. So yeah, but at least there's a lot of hype,
Yeah.
and we thought it was the perfect moment to swoop in and check out Take Two Interactive, the holding company, and to see is it worth anything, or yeah, should you buy it? Should you sell it when if you're holding it, or yeah, should you just wait a little longer?
Especially if you're, let's say, about our age and still love games, and you're curious, it's like, yeah, probably GTA 6 is gonna be one of the biggest, let's say, releases in 2025. So maybe you just wanna already try to make money on this by investing in the holding company. So this is what we're about to do. So we're gonna check Take Two Interactive, check its financials, try to understand the business behind it, and then see if it's actually worth paying the price for the stock, right? So, shall we get started?
Exactly. Yes, so let me jump on it first. So we have to take into consideration that some of the things about GTA 6 have already been valued into the stock. So if you look at, for example, at Barron's article, this article that I have in front of me that you can see, that came out in November 9th of this year, and it came out when the CEO, Strauss Zelnick, said that the development pipeline is robust and diverse, and we're getting closer to delivering the groundbreaking titles that our audiences throughout the world have been anticipating. And when this announcement dropped, basically the whole internet blew up. YouTube, like GTA YouTubers, just started posting like, okay, release dates, because he was talking about it's coming. You can expect an increase in revenue in this period. So people were speculating about GTA 6 a lot, and that's also when the stock price soared a bit. So you can already imagine that it has been priced in. So just to take that into account, well, when we're looking at this, right?
Yeah, exactly. Yeah, and it's also a very, very good point because of the fact that it's still a developer, right? Its financials are really dependent on the success of its releases, right? So if, for example, the next GTA is going to be a big flop, right? As for example, the what was it, Cyberpunk game, right?
Yeah,
It was very
yeah,
buggy. It had some issues. The financials of the holding company also took a hit, because I think the developer is a Polish studio and they're also publicly
yeah.
traded. So that was also quite a big of a buzz because the investors were also going to create a court case because of that, claiming like, yeah, why did you make so many damages? However, you made sure to release the new statements that the game is going to be great. Everybody's going to be happy on the release about it. And that was a lie. So yeah, you got to be very careful when it gets to these kind of things.
Yeah, exactly.
So shall we get
So yeah,
started?
let's look into it.
Yeah.
Yes. So
Okay.
what do we see already? So for the company's foundations,
Yeah.
well, of course, yeah. Let's go over the statistics first, as we
Yeah.
always
Like
do.
what we can see, right, is very interesting picture because first of all, you don't have dividends, right? So this is rather a growth stock. They are all actually also dilute you because the share buybacks are negative 10%, which I would say quite some,
That
quite
is
some.
quite hefty. Yeah.
Yeah, especially.
Have they been buying something recently? Is it something
They
that?
could be just because of the fact that they just get more equity, right? So by issuing more shares, they just get more money.
Yeah.
especially if you have
Yeah.
such a big game coming up as GTA 6. Probably need a lot of investments, let's say, and that's
All right. Yeah, makes sense.
yeah. But also PE is negative, so it means the company is not making money, at least at the very moment, right? And you can also see the same by checking the net income growth and the free cash flow growth for the past 5 years. However, the revenue is still growing, so this is a good sign. But yeah, they probably got quite a lot of expenses, so this
Yeah.
is also something to consider. Um, and yeah, and the long term debt is has a green check mark, which is good. Uh,
Barely though.
yeah. So they can easily cover it up. So
Yeah.
this is probably the way how they finance their games, right? By
Yeah.
issuing
Yeah.
equity and yeah,
Yeah.
but
Yeah.
not taking up debt. So
For sure.
yeah, quite interesting, quite interesting. So it's already it has some troubles, at least if you look at the quick snapshot. Jesus Christ.
Yeah.
um,
Also, if you for example, look at the statistics, yeah, you already discussed it, but net earnings ratio is really on the low side here. So, and not low, but it's average. You would expect this, or at least want this to be around 20%. And
yeah,
yeah, we can see 13, 17, 12, negative, and on the average is just 7%, which is not that great. Interest expense ratio is good, but as you said, Kirill, probably because how they issue, yeah, or at least get new finance in,
but you
or
can also see. So the thing is, the long-term debt to free cash flow for the past 5 years is only 68 million. However, if you check the long-term debt, which we raised in 2023, that's already 2 billion. So this is also quite a red flag, I would say.
yeah,
So the very last year they actually quite increased their uh, debt level, let's say. So this is also something to be careful. It's like when you go to casino and then you just place all your bets on red, let's say, and
hmm
then you see if it flies or not. So this is probably something what Take Two has with GTA 6 at the moment. They just need so much
yeah, yeah,
cash. Yeah,
they have it, yeah, they have writing on it, a lot of money, and they'll probably like if they deliver, it's gonna be a success, and they make it back easily. But
yeah.
okay, so let's continue. So we can see the research and development. You also want this to be relatively low,
Mm-hmm.
because if you have a good mode, you don't really need the research and development. Given it's difficult for a gaming company to stop, right? I mean, maybe if you're Tetris, you can have an R&D of zero.
Nobody's gonna play
Yeah,
it
but
though,
these
but yeah.
still, but yeah, people need to invest some cash into the research and development because especially for GTA, it's such a has been always groundbreaking in some extent. For example, the engines they started using in GTA 4, just the HD graphics they were able to utilize in GTA 5, and now of course with the whole 4K Ultra HD era, where you can already see it in trailers, the density of everything is just insane. Um, and of course, also if you look for further in details with with the shadows, lighting, how they are processing this, it's you need to they're trying to get most out of your hardware, and you need to optimize it with your software. So that's probably where you can already see this increase in R&D,
Yeah.
which is quite yeah, has been a huge increase, like 15% in 1 year.
To me, this feels like this company is like building rockets, in a way that you just build one very big rocket which you prepare for, let's say, a couple of years, right? And then you launch it, and then it either goes and does a job, like, I don't know, delivering satellites or whatever, or it goes bust and then ends up in the ocean. So this is yeah, quite risky,
And
to my
that's maybe
taste.
why you want to. We can look at this in another video. This is a bit of a tangent, but maybe you want to invest in Bethesda because even though their games are buggy as shit, so you still buy it.
Yeah. But
All
it's like
right.
that was the case for Activision, let's say, for example, right? They can actually have quite a decent job in terms of managing their financials, because Call of Duty is the same every single year. They make it every single year. They change almost nothing in it. People hate it, but at least it's good for money.
They buy
And
it.
yep, yeah. So it's disgusting as a gamer to play Call of Duty, especially if there are no changes in it for years.
Hey, but
But as
listen,
as an
listen, listen,
investor,
listen, listen, listen. it's basically like buying McDonald's stock, you know. Every once in a while, you need a little bit of fast food, and the same with
Aw,
Call of Duty. Like sometimes you just need to play the game, you
true,
know,
true, 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 true.
to get it out of your system. Okay, we're
Yeah,
back.
I mean that's actually good references with Rockets and with McDonald's. Okay. Yeah, yeah,
uh, okay, yeah, for the depreciation, I mean, they have a lot of hardware. Probably they have a,
yeah,
you know,
yeah.
just
But this is very interesting that it skyrocketed to 80% in the last year.
that's something to come. Yeah,
So why is that? Because let's say in terms of having inventory, right? All the games are mainly digital, right? Apart from probably like releasing some games for consoles, but then again, you're a console player. When was the last time you bought a digital disc to play a game?
physical or digital.
Yeah, physical. Oh yeah, sorry, physical one.
Uh, Quite recently, actually,
Oh
I
yeah.
quite enjoy those. Yeah, yeah.
Okay. Maybe that could be the reason that they start preparing this kind of infrastructure already. But yeah, you can again see that rocket building reference. You need a lot of equipment. You need a lot of these overhead costs to ship your
Exactly.
final product to a customer. Let's say so.
Yeah.
Be careful.
Then yeah, free cash flow outstanding per share, and then everything just ties in together really nice. And
Yeah, like the only
it's
thing
just
is I gotta say, if you could check, for example, the period of 2019 to 2022, right? You can see more or less decent numbers, apart from maybe the selling in general expense ratio, right? Just because of the fact that they still gotta put some money into marketing and etc.
yeah,
But yeah, then you are gonna have these years when the company has to invest into development, and then yeah, that's gonna be a little bit painful probably to be
yeah,
to be there as an
exactly.
investor. So
Yeah.
yeah.
All right.
Let's
We
move
go
on.
down and
Yeah, there's one more. So Fundsmith investing ratios, and then
oh,
here you can actually see some greens, right? Again, for the period of let's say 2019 to 2022, right? So it's actually very good to be an investor when, for example, GTA 5 has been released and Red Dead Redemption 2 has been released, right? And that's when they actually collect the revenues, after
yeah.
the development phase. Um, but yeah, something for you guys to keep in mind. Yeah. So the fun part, the very last fun part, I guess, right? So shall we do the valuations then?
Yeah, dude, let's go.
Yeah.
I'm curious.
So if
I've
we
done this quite recently, so
oh, you did?
I I
Okay.
I kind of know what's gonna come up, but we'll
Okay,
see.
okay, okay.
Let's keep the suspense.
Yeah. So if we check, let's say the revenue part of things, this is also I was also briefly checking before we started filming. That was also a little bit inconsistent, right? So you have like minus 50% in 2014, then you got zero, very dry year, right? But then at some point you got the revenues going up 50%, and in 2022 same story. So.
Well, you see, the year that GTA 5 came out, just
Mm, but
90% increase.
yeah. So it's a little nearly like a double in comparison to the previous year.
Yeah.
Yeah, this is great. And if we check free cash flow, huh? Yeah, more or less the same story. More or less the same story, right? So it's very volatile. So it's very dependent on the success of its releases. So, but if we check, let's say the average revenue growth, let's have a look. Um, so that's about, oh wow, 20% revenue growth. Wow, that's considerable, I would say, over the past 10
Yeah.
years. And the cash flows, if we check the cash flows, yeah, and for the cash flows, it's way lower. So what do you think?
Let's see what the analysts think, and then
Yeah,
we just take the average of that.
true. So for this, we will just go to Yahoo Finance as usual, and then we'll just go to Interactive, ticker symbol TTWO, and then we go to analysis and scroll down to the growth estimates.
60% for the next 5 years.
Wow, that's quite a lot. That's quite,
It's
and for the
crazy.
next year, 130%. I mean, which is
Yeah.
understandable, but you
For
also gotta
next
keep
year,
in mind. Yes. So next year, probably 2024-25, right? So they probably assumed
So
that the release would be maybe around that time frame, right?
yeah, we'll see. I think this is overly optimistic.
Yeah, yeah.
Um, so okay, let's just stick to the. Let's do 15, right? Let's do
15?
15%. Yeah, yeah.
Because we're also talking about 10-year horizon, let's say, or at least 5-year horizon, right? So
I'd say 5 year.
yeah, so this is something 15%. Yeah, if we also
Yeah,
consider, let's say, the inflation increases and that they still have pricing power, so they could probably again charge, let's say, $70 or $80 per
they're actually
coffee.
talking about pay per hour.
Really?
Yeah,
No way. Are you
yeah.
kidding? No
No,
way. No, I now I feel like I don't want to continue filming
but
the video about this
this
game.
is what this is what Take Two has been saying. Yeah,
Oh, this is dirty. I guess this is gonna be getting a lot of pushback from people. I feel like it. But anyways, let's keep 15%.
yeah,
P ratio. P ratio. This is interesting. So we just go to microtrends.net, and again you can just plug in TTWO for Take Two Interactive, and this is actually quite uh not so volatile, let's say. So the as low it the P ratio goes as low as 0, makes sense because the past year
yeah.
was negative, and it goes as high as 80, and 80 was in 2022. Hmm. So shall we do it 0 80? So somewhere,
Yeah,
because
yeah.
it's in the
Let's
range
do
of
it.
40 on average, right? If you just check
Yeah,
it.
exactly.
Yeah.
Yeah.
So it goes 0 and 80, and then required rate of return, discount rate. What do you usually do?
So we always do a little bit more than 10% because when you invest in S&P 500 or similar index funds or ETFs, you would expect between 7 and 10% in your returns. But because you're taking a risk with picking a specific stock, you increase it a little bit just to make it worth your while. You're also having a bit more risk because it's only one stock, and therefore you should be paid accordingly. For the discount rate, we always stick it to 11%, and a margin of safety. It is what you feel comfortable with. Um, you can adjust it accordingly. Yeah, what you say? I stick like keep it at 30%, I believe, not lower because it's. I think I'm not sure that GTA is going to go elsewhere. Same for my same train of thought goes for for how much years we should discount rate. But what people play and how people are playing is changing over time. And of course, GTA it's a- it's a heavy hitter. It has been since what the PlayStation One or the PC era when it's just when gaming just started. Yeah, but we're dealing with also with a lot of tech. Uh, you know, things are changing quite fast. So I'd say keep it at 5%. Like yeah, 5 years, 3%.
Yeah, yeah. You gotta be careful. That's the only thing, because it could also be the same story as with Cyberpunk. I mean, Take Two
Yeah,
has good reputation. It has good, let's say, history of delivering, right? And all pretty much its games were like at least major titles. So I mean, Red Dead Redemption, GTA, and GTA, they were absolutely amazing, right? So
yeah,
you cannot really compare it with, let's say, McDonald's of Activision. Not saying anything, but just highlighting the fact.
yeah. But exactly, that's it. And it's also not that they have like, for example, like American Express, they have had this product for
Yeah,
ages and it's just there, it's just constantly grinding and pushing and
yeah.
yeah. I'd
There's
say this
more
is
room
fair.
for failure. Yes, exactly.
Yeah.
Yeah. Okay, so then what we do is we just hit the analyze button, and then our lovely spreadsheet, hopefully soon to be an actual web app, is gonna make some calculations and it's just gonna provide some magic. And are you surprised with what we got?
No, this is something similar that I had when I did it a couple of weeks back. Yeah. Uh, See, that's the thing. Like, so my expectations is that GTA 6 is priced in already. This happened around November. Uh, yeah, but you're basically buying the hype for GTA 6 at this point, but it's already calculated in the price, in my opinion. Yeah, it's hard uh, to put any like sell or buy. By the way, again, not financial advice. Do your own due
Oh yeah,
diligence always. Let's make it clear. Just read
yeah.
disclaimer. Uh, but yeah, do your own homework on this. But for me, it seems like a pass.
The thing is also, at least in this specific case, I would also not really count on the discounted cash flow formula result and the intrinsic value. Simply put, because it's taken the previous year's cash flow results, right, which are negative, of course. So what this means that you would rather than probably adjust your starting point for the cash flow, right? Maybe just increase it, and then in this case the result would be different. So something similar to the target valuation
Yeah.
formula or Ben Graham's one.
If we would take the average of those two, yeah, then we would get somewhere near the actual valuation indeed.
Yeah, yeah, but for to me personally, it's also not in doesn't really go into my risk profile. Uh,
Yep.
the company could be great, the game is great, but then this is also means that something which you could be using doesn't necessarily translate in good financial or business results. So this is also something for you guys to keep in mind. You know.
And the thing is, of course, that uh, yeah, you're already buying for a high price, but then also you're buying a company for a high price that doesn't really show it in the financials. So in the fundamentals, when you would, for example, would like to buy, for example, Visa or Mastercard, and it has those strong financials to back it up, then you can choose to pay a premium. But all things considered,
Yeah, and also it's also about consistency, right? Visa, the reason why you'd be even willing to pay the premium is because it delivers consistently on a yearly basis. You know, it's even in 2008 it didn't have a bad year at all, even though the whole world was pretty much on fire. You know, mildly saying. So yeah, just different companies,
but
different business models. That's it. That's about it.
there's one thing else to discuss.
Yes,
Where do we get the tool?
yes, exactly. So, again, as usual, guys, you can just go to 930.com. It's just gonna load real quick. This
Yeah,
is our website where you can go and you can just click on Get Access Today. Um, it's simple. It's just for now €1 just to get access, and also on top of that, you're gonna be getting access to all the updates at this very moment because you would be an early adopter, and we just want to reward you for that because we appreciate you spending time with us because nobody's watching us yet. Hopefully, it's gonna change soon. You never know. Um, but yeah, but then go check it out. Hopefully you'll find some value in it as we do. And yeah, do you have anything else to add, Robin?
no, I think that's a perfect end note. We'll stop it there. So thanks for watching. Leave a like if you did, and subscribe if you want to want to see more videos. You can check out our other stuff if you're new to the channel. And yeah, as Kirill said, check out the website, and then I'll see you next week, Kirill.
Bye bye. Hopefully next week.
Bye.